Hello, I'm Debbie Bell Hosking for FinextraTV in the virtual studio, bringing you our Sibos 2024 series. And I'm joined by Chad Wallace and Alan Marquard, both of Mastercard, who are bringing us an announcement hot off the press, but we shall find out more. Welcome to you both.
Thank
Lovely
you.
to have you here.
Hi.
So, I've ended that on a bit of a cliffhanger, actually, about a new announcement hot off the press. It's an announcement about a solution. It's called Mastercard Move Commercial Payments. So, Chad, if I can come to you first, what would you say are the pain points and the challenges that led to the creation of this solution?
Absolutely. Before I joined Mastercard, I actually worked in a transaction banking business for many years, and so spoke to many corporate customers and also managed the product set as it related to cross-border payments. And coming to Mastercard, it gave us an opportunity to really look at the landscape and think about ways that we could help innovate. When we thought about some of those pain points, often we hear things from our transaction banking partners around things like the operational cost of managing some of the payments that get stopped due to the fact that they have maybe data errors or compliance issues or risk items that they need to be able to address. We also hear feedback from customers related to the correspondent banking network and the fact that there is trapped liquidity that sits out there and the timing of when payment moves across that value chain and the settlement associated to that. In addition, we also know that there's a big focus on data and speed. And so the ability to be able to make a payment globally, be able to make sure that that payment is received by the financial institution in more of a real-time manner, and then it has the appropriate data that the corporate can use in order to reconcile the accounts payable process and the accounts receivable process is really key for a lot of the things that our customers are talking about.
Mm-hmm. And we're hearing about the things that are happening in the industry. But Alan, if I can ask you, do you think that the current innovation, was it doing enough? What led you to this solution?
Yeah, I think it has done a lot. I mean, I think in payments, we beat ourselves up a bit. But when you look across the last 20 years, there really have been improvements. Some of those in the retail sphere have been really striking. We have real-time payment systems that are everywhere. We have lots of cross-border solutions. We have fintechs that create fantastic front ends. There's a lot of competition in pricing. I mean, it's come a long way. And remarkably, you'd think that in trade and treasury payments between banks, that would be given the priority and it would all be fantastic there. That's not the case. And in fact, as Chad said, some of the biggest pain points sit in that arena. And a payment is not a payment. Different payment sizes and types come with different pain points, particularly when you get into bigger payments. What that means for liquidity is a lot more significant, for example. And so most of those payments in trade and treasury come through the old, what's called the correspondent banking system, which has long chains of banks linked across borders in order to facilitate international payments. And there have been innovations, as I say. SWIFT has done an amazing job in creating more transparency and traceability of payments, recognition of beneficiaries. They've been a proponent of the ISO 20022 messaging standard, which is a much richer data format that carries a lot of the information that's necessary for these types of payments. And then there's been a whole raft of innovation around on-chain and digital payments. And for sure, those payments can address some of the pain points relating to speed and relating to being always on. But they absolutely haven't scaled yet. And when you look at the global flows in trade and treasury, 99 point something % of it is still going through correspondent banking. So although there's promise in what's been done so far, no one could look at the state of correspondent banking for trade payments now and say, yeah, job done. It's all working well.
Yeah. And we're here to announce the new solution you've come up with. So let's get down to that. because there's a lot of work that's gone into that. So perhaps I should ask you next, Alan, is how did you come up with this new solution? And Chad, to you next as well. What is it doing for the industry? What is it addressing? So first with you, Alan, how did you come up with the solution? What was the process?
It was quite simple. First of all, we took the pain points. That was the obvious starting point. And then we added a nice dose of reality to how we solution for it. And what I mean by that is there have been a lot of PowerPoint solutions to global payments that, have arrived and said they're going to transform payments and solve everything. The reality is these payments are nonstop all day. We can't switch them off, build something for 5 years and come back. And also there's been a huge amount invested in the current correspondent banking framework. And that goes not only in terms of the technology and the connectivity, but also the banking relationships. Relationships between banks go further than simply processing payments. And so there's a whole lot that you don't want to upend and throw away in transaction banking and trade payments. So we thought about how could we create a solution that would work with players like SWIFT, work with the correspondent banks, not try and upend that, but improve it. And that was the principle that we used in order to build this. So we took that, we looked at the pain points that Chad mentioned, and we said, right, so broken payments, delayed payments, all of this, what's causing that? And the conclusion we came to is that there's no set of rules and there's no orchestration sitting over it. An instruction goes from one bank to another down a chain, and you hope it doesn't get messed up somewhere along the line, either rejected because of an error, or even not an error, just a different expectation of the messaging standard or the information that needed to go. Then you have the risk appetite of players in the chain. Any of those could upend it. So the thinking was, how do we make sure that a transaction is not only properly initiated, but that everyone in the chain is happy with it, and particularly that the receiving bank is happy to give the instruction to say, yes, I will receive that payment. How could we line that all up in an orchestrated way so that everybody would know that the payment would happen and when it would happen? And the benefit of doing that, there are numerous. One is you stop trapping liquidity because you don't have to send payments down a chain until you know it's going to happen. So you hold the liquidity with your bank until it goes. And you also know that it's on the other end, the person receiving the money and their bank know that they're certain to receive the money, and they can start deciding how to recycle that liquidity on the other end. We also thought about one of the reasons for breaks is poor data carriage. So we thought by acting as a scheme and orchestration layer, instead of letting the message go down the chain like a pass the parcel, we would make sure that the version of message is exactly the same to everybody. None of the fields are dropped, and that full rich data message is received at the end with all the components in it. We thought about what else makes payments clunky. We thought, right, there are these risk controls and appetites. People aren't always happy to receive every kind of payment, not from anybody, not necessarily in certain segments, etc. So how could we add a layer that would help automate those receiving controls that would speed things up and make it cleaner? And then the last thing was, as I said earlier, there are now digital payments. So what we thought about is, should we be dictating how these things settle? Or should we have a flexible orchestration model where we can settle into a digital ledger if necessary, or in fiat currencies into our own Mastercard settlement network, for example? So in our pilot, we worked with Finality, along with Lloyds and UBS, just to show we can do the digital version. We know we can do the settlement in fiat because we do that all the time. And so that choice of settlement venue will mean for the banks who are part of this network, they can choose, do they want to settle into real-time infrastructure? Do they want to settle batch or net, digital or fiat? So we sit outside that flow and we'll orchestrate so that banks can continue doing the business they wanted to do previously, settle where they wanted to, but we'll just make it seamless, quicker, less prone to breaks, but with all that choice around it.
Seamless, quicker, less prone to breaks, and more choice. So, Chad, over to you, because that's quite a nice menu. So, Mastercard Move commercial payments. What do you think this is going to do for the industry?
Yeah, we're really excited to be able to launch this product. And I think that by working closely with many of the transaction banking partners that we have as existing customers on our card side, that this is going to really revolutionize how they interact with their corporates as well. Not only is this a help for their own liquidity needs, but honestly, if you think about the scenario, you could see where receiving financial institutions could give real-time credit to the end receiver of that payment. And that could happen long before the settlement happens. And that's just a game changer as far as the concept of digital payments that need to be able to send cross-border. We're really looking forward to be able to making sure that we continue to evolve the product. And so Alan mentioned the fact that we're launching with a set of features, and we've got an incredible roadmap to be able to continuously offer new capabilities in the network as well.
Wonderful, Chad. Thank you so much. It's been great to hear about this announcement of a solution. Always exciting to hear about how things are changing and moving forward continuously, and especially when you're trying to address some of those pain points that you mentioned earlier, Chad, as well. So Chad and Alan. Alan, thank you for all the background, especially in terms of what you did to come up with this solution. It's always great to hear that about all the work in the background when we just hear the final announcement. So thank you both, Chad and Alan, for joining us in our virtual studio.
Great to be here, Debbie. Thanks for having us.
Thank you.